Well, welcome to the month of June. It's hard to believe it's here already. And here are the market stats as of May 31st, 2021. And you can see we are still in a seller's market. We saw almost 60% of the detached houses sold in Calgary for the month of May. Now that is a little softer than what we saw in April and March. In April, we saw, almost 74%. And of course, March was just a crazy month where we were, almost at 78% of the houses listed sold. So I'm a little surprised by that. I thought maybe with the mortgage qualification rules changing as of June 1st, I thought maybe May we would have saw maybe a stronger push. But what we did see is more people put their houses on the market in May, and I think that settled things down a little bit. And you'll notice for the price point here, our benchmark price is $533,300, and that is up slightly from $529,100 month over month. So with the higher levels of inventory, we didn't see as many price increases as we did between March and April. So it's healthy for the market, by the way, and it's not a bad thing. And 60% of the houses selling is still really impressive. And keep in mind that's detached houses only. That does not include the condo market or attached. Now here are the hard numbers. 3,197 properties were listed, 1,911 sold. So you can see still a pretty good demand, but the inventory levels being higher at 3,197 compared to the month previous at 2,780. And of course, in March, we had 2,409. So that's why you saw price increases really go up in March, just because that supply-demand ratio there was really strong. So this is going to keep things a little bit more settled down. And it'll be interesting to see what happens in June, because the new mortgage rules took place June 1, and we'll see how June unfolds. But I can tell you so far, the first 3 days into June, it's remained very strong. So it's not looking like this mortgage qualification is going to affect the overall market too much from what I can see. But as always, it's always interesting to see month to month how things look. I think the nice thing about right now is if you're a buyer looking for a detached home, you have a little bit better opportunity with a little more inventory selection. Things aren't selling quite as fast as they were, and we're seeing fewer multiple offers. So it's good if you're a buyer. 26 days on the market is how long it's taking to sell a house, which really is not any time at all. And here's our market distribution. And you can see that, the $300,000 to $400,000 price point now for a house in Calgary is getting lower and lower. So we're moving out of that price point. It's very, very difficult now to find a nice detached house under $400,000. It's only 15% of the market. And that was, as much as 22 or 23% of the market, a year ago. 400 to 500, that is your sweet spot. That's where most of the first-time buyers are looking, and that's 28% of the market. And we need this market. I mean, we need the first-time buyers to come in, because that's what moves all of the other price points in every one of the other markets. Because if you're in the $500,000 to $600,000 home and you want to, move up to the 6 to 7, well, you need these first-time buyers to come in, and thankfully they've been coming in quite strong this year. So the 5 to 600 range has really moved up. I mean, that's 23% of the market. So that's very interesting to see how strong of a market that's become. And of course, just this kind of lifts all the boats in the harbor. It's like the tide coming in, and you can see that that we've seen a pretty healthy market on all price points. The one I always look at is the $1 million to $1.5 million in the luxury market. And that's staying pretty steady at 4.27% of the market. And in the heyday of 2007 and 2014, this hit 5%. So this is a pretty strong, healthy market for detached. Okay, well, now we're looking at the semi-detached. And this is still a strong market. 50.45% of the properties that were listed in May sold. And, that's down slightly from April. And but down a little bit also from March, but that's still a pretty healthy market when you can see 50%. It's kind of bordering on the definition of a balanced market to a seller's market. So higher inventory levels have also affected this market, just like it did on the detached market. Our benchmark price is now at 423,700, and you can see that that's up from 418,000. So that's a pretty healthy growth. And I know that a lot of those semi-detached houses in the inner city have been moving. So that's bringing up our benchmark price as well. But what a difference from May of last year, when we're sitting at 387. So that's some really good growth on price. I'm sure a lot of people are happy about that. Now here's the hard numbers. 281 houses or semi-detached houses out of 557 have sold. So slightly down from 299 in the month of April, 269 in March. So healthy market for the semi-detached. And I'm really glad to see that because it's been such a soft market for the last couple of years in the semi-detached market. 30 days on the market is how long it's taking to sell these. And keep in mind, semi-detached are not considered condos. These are attached properties that have no condo fees attached to them. Now, let's see where the market distribution is. Not as many either under 300,000, so that percentage has really dropped. The sweet spot, 300 to 400,000. And you see, this is what happens with semi-detached. A lot of first-time buyers will take a hard look at what they can get for a detached house first. And if their budget won't allow, if they just can't maybe break the 400,000, because as we just looked at the detached homes, there isn't as many now under 400, this becomes their second choice, where they don't have to get into a condo situation. They can get a garage, they can get a backyard, and that's one of the reasons that market is moving pretty good. And then of course you can see it just drops right off, because if you can afford 400 to 500, there's a good chance that you might look at a detached house as your first choice as opposed to going to attached. When you get into the $600,000 to $800,000 price range for attached, that's where you're getting into the inner city properties. And there's a lot of selection there. And it's so good to see 11.89% of the market and 11.72% of the market in both of those categories. That's really positive. Okay, we're looking at row house or townhouse, whatever you like to call it. Right here, 39.2%. Just amazing in Calgary how as soon as there's a condo fee attached to a property, the absorption rate is much lower. There just isn't as great of a demand for anything with a condo fee in Calgary as the non-condos. So I don't even know all of the reasons why that is. It's a different mindset, because there's other markets like Toronto and Vancouver where that's just not an issue. But again, a little bit of softening here from 44% absorption rate last month, 43% in the month of March. You can see our benchmark price at $296,400. So that is slightly up, which is good to see. And from a year ago, we're looking at $274. So this is all moving in the right direction. I'm sure there's a lot of people that have a row house that's happy to see that if you're trying to sell one. 1063 is the amount of properties that were listed. 417 have sold, and that's really healthy. It really is. I mean, that's just a good, strong, healthy market, and hopefully that continues. 417, out of 1063. I mean, that's only down slightly from April, and still up a little bit from March. But the inventory levels have definitely increased. March only had 877 on the market. So if you're a buyer, you got a lot more selection in that market. 41 days on the market is how long it's taking to sell. And our market distribution, and you can see it's the same thing here. If you're looking for a row house and your budget is under 300, you can see why this is a good choice for people, because there's not a lot of attached ones that don't have condo fees. So this becomes the next choice that a lot of people have. So quite frankly, in this range, you'll see a lot of people that have gone through a divorce. They buy row houses. You'll see first-time buyers that are just wanting to get into the market. They like walking up to their own door, or maybe having a garage. That's why this market is so healthy here in the 2 to 300. And again, it drops because if you're going to be looking at 3 to 400, often your next choice would be to be entertaining the idea of a attached property that doesn't have condo fees. But the reason that this is still strong is that you could also move closer into the downtown core, have more amenities, and be under $400,000. and then it really drops down, once you hit 400 to 500, because now you have a lot of selection for detached homes and attached homes that don't have condo fees. And of course, we just don't have a strong market at all once you get past $400,000 or $500,000. Last but not least, apartment style condominiums. We are down to 19.29% absorption rate. So unfortunately, we just don't have the demand for apartment condos as we do in the other markets, such as attached, row house, and detached. But still better than what it has been. And, everybody who owns a condo is really watching this market very, very closely. I know, as I've mentioned many times before, there's lots of them that want to sell, and they're waiting for the market to get a little bit better. And the good news is we're seeing modest price growth. Our benchmark is at 252,600, and that's up from 251,900. So it's not like we're seeing any major price increases, but at least we're going in the right direction, because we were going on the other direction for the longest time. Now, hard numbers, 379 out of 1965. So it's still a pretty healthy market, all things to be considered. It's, as I mentioned almost every month, it's definitely a little bit of a concern still that we have a lot of apartment style inventory in Calgary, and there's still more being built, which is a concern. It's hard to know what's going to happen over the next several years, but I will tell you the economy is looking a lot better with the fact that we're coming to the end of COVID. Oil prices are up. Things do look pretty positive, and I think we got our fingers crossed that this is going to stay pretty positive and our market's going to stay relatively healthy. A good healthy market, it just sees growth, modest growth. It's healthy to see 2, 3, 4% per year is a real healthy growth. And hopefully we stick somewhere close to that for Calgary. We are definitely, attracting some people coming here from other provinces, namely, the big price of Vancouver and the big price of Toronto. That seems to be happening. And maybe some of these people will come and pick up some of these condos. Our market distribution for condos, it remains relatively the same. You've got a big market under $200,000, and you've got a pretty strong market under $300,000. Again, the moment you get into 300 to 400, it just drops off because you've got a lot more options. So, Rob's big prediction for the month of June: I think the market will stay relatively strong. I think we'll see inventory levels climb a little bit more. I think it'll just not be as crazy of a demand as it was in March and April, but it's still going to be a really healthy market. Just one success story for you that I like to throw in. I just recently sold a property in Ranchlands, and it was so amazing that the seller took all my advice. We went in and we actually spent some money in there doing some of the upgrades because it absolutely needed it. We spent the money in the right places, so we didn't overspend. We did it right where it needed to be, and it was so good to see that property sell after 5 days on the market and get actually 99% of the asking price. So we were able to get the property sold, get back the money that the seller put into it, and that's the sort of thing that you can do in a market like this. So if you want any advice on that, just reach out to me. I've got enough experience in it now. We've kind of got this down to a science. We know exactly what to do, where to spend the money, and it works. And we're in a good market for doing that. All the best. See you next month.